What's up, guys? It's January 30th, 2025. We had a gap up in the markets, a small rally, sold off, made a wedge bottom, testing the breakout or testing a breakout point here. Then we rallied for the rest of the day. Well, the last 30 minutes was a sell. Pretty interesting day. We're range bound. We've been sideways since the big down day. So big up, big down, sideways price action. That is very common. Here we can see two legs lower. You can see a lot of legs lower, but leg one, pull back, leg two, leg one, pull back, leg two, pull back, leg three, pull back, leg four. It's a wedge bottom into support. The support is right here to the left. Wow, so the daily EMA didn't catch up yet. This is the daily EMA on the 15-minute chart. Right here, testing this support where so we sold off, testing this rally support, and then we had a trend line break. And then there's three types of things that can happen when we have a trend line break. For the bear side, we have a strong sell and we have a trend line break. So the three things that could happen are, in this case, it was a higher low, so that's one. What the bears want is a retest, two, or the bears want a new low, that's three. So in the order of strength for the bears, it would be leg one, pull back, leg two. So that would be the strongest because the new low is made. Leg one, pull back, leg two. That's good. They let the trap bears out. The bears that went short here are trapped because of this rally. So this one lets them out. They buy back shorts. And today we got the third option. The bears got the third option, the weakest option. The best option for the bulls, the worst option for the bears. Leg one, pull back. The trend line break creates a higher low. Bears that short here, if they're quick enough to short here, then they will make a profit on their second entry and get out break even on their first, because their average price will be around the 50% level. They buy back shorts and that causes a rally here. Very close to the high. Leg one, pull back, leg two, pull back, leg three. If you were hoping for a breakout of this range, you got to ask yourself how much time is left in the day and how much range has the bulls already made. The bulls we are range bound, so it makes more sense for bears to sell highs. They've had a 60-point rally almost. Let's go to the low. The bear tick's probably 60-ish. So they had a 60-point rally, and then you're going to ask for another 60-point move. That's 120 points. I think, I was watching the charts. I didn't trade too much today. 6100 level, I think, was a magnet. Looks like we rallied past it, sold past it, rallied back to it. 5-minute chart. Got a bunch of gaps that all somewhat get closed. I wonder what's a cleaner chart to look at. I think we're going to look at this chart. It's a little bit cleaner today. There's just a lot going on. Turn on the big gap up. Bar one, bad follow through. Bar two, good bull bar. You got good enough for a quick scalp. I don't trade up too often in the first 30 minutes of the day unless we have two gaps open. So I see leg one, pull back, leg one, pull back, leg two, pull back, leg three. Bar two gets bought up past the 50% level, 75% level, so you already know that's a weak type of price action. Then we have bar three being climactic. It's the nice looking bar out of these two bars. Bar five is bad follow through. So if you buy the high bar five, bar four is bad follow through. You have 5 minutes to think about getting out here, and you have 5 minutes. You don't have necessarily 5 minutes because obviously the market didn't stall above your price for 5 minutes, but you've had time to get out of a bad long within those two bars, and even with a profit or a small loss. So if you're holding longs, by the time you see 7, I think you got to get out. We have 3 bars growing in size into support. Bears are testing low of the day. Leg one, pull back, leg two, pull back, leg three. We go sideways. Leg one, pull back, leg two, pull back, leg three. This creates a double top. Bears sell the last swing point, bar 9. Sells off, renewed momentum, bar 12. Bar 13 looks like a good reversal bar for a buy. I was skeptical. I almost bought this bar at the 17 fill. So I would have had a limit order here and got fill on 17. But I didn't because the tail on 16 is skeptical. It's suspicious because it's a 5-point tail. So bears that sold the low close of 12 betting on momentum actually made money. Yeah, the slower traders would be trapped here, but bears made money, and bears aren't. Look at bar 26. Bears that sold here, I was a bear that sold this. Bears that sold 25, right? Yeah, this is 25. Bears that sold 25. Let's say they market order in had about a 2-point trade, and the Bears that sold on a stop order had about, and that's being generous, about a 1.5 point trade scalp. So if you compare bar 13 to bar 26, Bears made money with bear momentum. They have an opportunity to scale in at the last swing point. Here we have 22, 23, 24. We have a tail right here, 22, 22, 24. We have a gap open now. That gap is being tested with 26. I was a bear that got filled below 15. I had to scalp out on 27 for a small tick loss. It bounced right off my order. Very annoying. Anyways, that's the name of the game. So 27. So let's reverse. So here we are again. I got carried away a little bit. They make money here. Goes for reversal. Bulls try and buy this for reversal. They get trapped 15. They still have time to. They can either buy more and get out for a small tick. I think it's best if we just get out at close as you can to break even. If not, you take a small couple point loss. Bulls that got trapped here did that, and that caused 17, 18, pull back 19, nested wedge, leg 1, pull back leg 2, pull back leg 3, pull back leg 4, leg 1, pull back leg 2, pull back leg 3. I got trapped shorting the third leg here. That was a pretty bad trade in my opinion. I got filled and out in about a bar and a half. So yeah, I think today was hard for limit orders. It was more of a trending market, although we are still range bound because we had a leg down and a leg up, and that was a little bit of an overshoot. I missed this limit order entry. I was not paying attention. I was paying attention, but I didn't catch on that this was testing. This got tested. The gap closed, and we had a strong rally 22, 23, 24. With the breakout gap here, bears that are selling with limit orders are now trapped. 23 is the first reversal shallow pullback. 26 sells off, reverses long. So bears that get short here are trapped. I got short there, so I actually I had some grace. Filled here, out there. 26, 27, 28, 29, 30. It's a 1, 2, 3, 4, 5 bar rally. We're testing the swing point. The midpoint of a big bar, bar 7, leads to 2 or 3 legs lower. I count multiple legs lower. Keep it simple. Leg 1, pull back leg 2. Or you can say leg 1, pull back leg 2, pull back leg 3, pull back leg 4, pull back leg 5. Testing this. Then we rally 37, 38. Inside bar after a sell-off. Again, we talked about the higher lows opportunities for the bears, so they can go like this. New low. They can go like this. Same low. They can go like this, which is the worst option for the bears. For the bears, that's the worst option. For the bulls, this is the best option because now bears are trapped, expecting to retest the lows before at least a rally. They have to buy back shorts. Here's a trade that you could take, but I think it's hard. I did not take this. I actually had a short below around the EMA, and I got out here for a couple points, and that was my last trade of the day. Playing it slow today. If you're in the Discord, you know why. Your boy's a dummy sometimes. So yeah, rally, pull back, and then bulls start to break out. If you're short, you really got to get out with this type of pressure and this type of pressure. We could see at least higher prices. Not saying we're going to make a new high, but I think the bulls wanted to at least get to the previous high where they had gotten trapped. 40, 41, 42, 43, 44. Bull rally. It's shrinking. There's multiple legs within this rally. Leg 1. So we'll count this as a full leg. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. Look at bar 44. It's a pretty big bar compared to the last two bars, 42, 43. Climactic price action, we go sideways, 45. Bad sell signal, you can buy that. That's something I would have taken back in the day, but I'm just trying to focus on limit orders for a little bit here, and then down the line I might fuse my market orders, limit orders, but that's another day. That'll add another element to trading I'm looking forward to. 47 rally, 48 testing the breakout point, 45, 49, 2 bar, 49, 50, 2 bar rally. Think about the bulls that bought this. They buy this high and they're in profits right away. They're expecting a vacuum test up here, but then they see 51. Momentum is slowing down, and you can see that 51 is a sign that something is not right in the trend. Leg 1, I'm counting opposite bars now. Leg 1, pull back leg 2, pull back leg 3. Something's not right in the trend. The market goes sideways. I don't think it's bad to be long. I don't think it's okay to be short. You got to ask yourself, you can start buying below bear bars and scalping out, or sit out till you start to see 2, 63, 64, 65. This again would be a scalp. Leg 1, pull back, leg 2, pull back, leg 3, and the legs are shrinking. So that shows you that bulls are less willing to buy highs. 63, bad follow through, but it's followed through. 64, 65, 66, good follow through. We have big, small, big patterns changing. And then we have sideways price action and a small 3-bar rally at the end of the day. I think it's best. Whoa, did not mean to go. I went into the other screen. We're at the new high of the day, 69, 70, 71. 3-bar rally. It looks like it gets continuation, but it really doesn't. You can get this for a quick scalp. I don't think that's a good scalp. And then look at the market. The bulls sell out of a high one at the top of a trading range. Bang, shut down, big bear bar, big gaps here and here. Good follow through 75. Bad follow through 76. Good for the bulls testing the functional testing this level here between 23. Rallies for a few legs higher, leg 1, pull back leg 2, pull back leg 3, creates a wedge top. We talked about that in yesterday's video. Testing the upper third of bar 74, sells off, testing 75. I think today was better than yesterday. Yesterday was FOMC, so keep that in mind. Yeah, let's talk about some. I'll talk about this, and I'll go over the trades that we could have taken. Every video I'm gonna try and talk about one part of fractional price action so you guys can start to get the idea of where I'm counting legs from. A newer trader may say, hey dude, that's one leg, and he's right, it is one leg. On the 5 minute, on the 1 minute, we already took a peek and we know that there's at least 3 legs, and that we should expect sideways price action. So here, look, leg 1, deep pullback, trading range behavior, testing the breakout point here. Rallies, leg 1, leg 1, pull back, leg 2. There's 2 legs within that rally. Leg 1, pull back, leg 2. We're trading range price action. Could be a trap. Bears end up getting trapped, shorting the last swing. I don't know why I got a sore throat today. 208, breaking out, trapping limit order bears. They get a chance to get out. They short higher. They're shorting breakout points. It's not the strongest rally, but eventually it becomes strong because they keep getting trapped, thinking they can short here. They have to buy back shorts or average in. Never a good idea to average in, unless it's part of your plan. And there is a time and place to average it. I do it seldom, but when I do it, I make sure I am average. If I'm going to average in, if I'm averaging in longs, I want to be averaging in above the EMA in a bull regime. If I'm going to average into shorts, I want to be below the EMA and in a bear regime. So I'm trading below the higher time frame EMA. So at least I have a bigger picture, something's in my favor. I'm losing my train of thought here, guys. So yeah, we can count these legs. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4, pull back, leg 5. Here's it breaking out of this swing. 215 is the pivot, so we'll go leg 1, pull back, leg 2, pull back, leg 3. Sells off, climactic price action. We go sideways to up. Remember the box analogy. If you shoot a bullet into this box, momentum is generally going to come out the same way. So we can see that here. We have two-sided trading, so it is range bound, but then we get trap bears 239, and we rally leg 1, pull back leg 2, go sideways at new highs. I'm going to wrap it up here, talk about these trades, and I'll just take a peek at the gap real quick. Okay. I don't think it's worth, you could scalp the open, that's good. I'm becoming more of a scalper, so just keep that in mind when I'm showing these things. 3-bar micro channel, short the first pullback, you sit through a small drawdown here, you could scalp out. I actually would not short this into support. I would wait for a deep pullback, testing something. So like something like this 15 is a low too. Take that for a measured move down. You get filled on 19. You get filled around where support is. So that's a good one, I think. 3-bar micro channel, you buy the high. You're just short of 1-to-1. You're gonna have to sit through a retest. So I think it's best to start scalping out when you see 3 bear bars. That's a micro channel that should 3 bear bars in a row. That's a micro channel that should get a second leg of some sort, and it does with 34, 35, 36. There's also 3 legs in there, so you can start to think about buying again here. 40, I think 40 was the best trade of the day because it's a high one. So if we took this entire leg, which I don't recommend going for moves this big, you can have targets. Look, that was met, but I would scalp into this. I would scalp the swing target. That's my suggestion to you. If you like swinging, great. I am sure as you evolve as a trader over time, you're going to want to scalp because it is just better. You can scalp this leg, you scalp that, but don't change. If you're profitable, do not change what you're doing. Keep doing it until until it lands on your lap, kind of. 40, it feels like, 40 is a high 2 of this rally here, like 1, pullback, high 1, 39, pullback, high 2. Buy that for, you can just take that for a 1-to-1 trade. If I was long 40, I would go for 1-to-1, maybe 1.5R. We get filled around here, sideways price action. We go sideways, and then I look to buy another high 2. I'm not really market ordering right now, so that's out of my scope for now. I will introduce that once I understand limit orders. Here's 3-bar rally, 48, 49, 50. Why did I put a bear bar in the thing? Because that's a bull bar. It closed bearish, but it's a bull bar to me because there's more bull pressure on this side of it. So there's your, it's actually a 1, 2, 3, 4, 5, 6, 7, 8, 9. That's a 9-bar rally. Even though I said it was 3-bar rally, you get your 1-to-1, and then it sells off. I don't think it's worth selling this. This is why I don't trade past bar 72. I say it a lot. Anything can happen past bar 72. Go over the gaps really quick. Trading range price action, gaps get closed. We have a gap here, bar 4. Sells off, it's closed. Then we have a gap here getting tested. 50% of this gap got tested, and it led to a sell-off. Gap here gets closed. More range bound price action. What is the difference between gaps and reversals and pullbacks? Reversals happen at the end of a trend. Pullbacks happen at the beginning of a trend. Here is a reversal price action. Here is pullback. I gotta speed up here. I gotta bounce out in a couple minutes. Here's a reversal because at the end of a trend, 3 legs down, 1, 2, 3, reversal. We're in the middle of bear momentum. That's a pullback. Pullback gaps are staying open until we get this price action that puts us in the top of a range. Pullback, these get closed. This gap stays open for the majority of the day until 74. This gap gets closed. The best the bears can do is have a range bound price action. The best the bulls can do is keep gaps open and then do that for the majority of the day until right here. These gaps stay open. This gap stays open. All these gaps stay open until these last 2 gaps. And now these gaps get tested. Bears got a small gap here. Bulls barely have a gap down here. Appreciate you guys. I love talking to you guys in Discord. This is getting fun. I will probably be live streaming again tomorrow. I had a hiccup, man. I just had a lapse of judgment. I got greedy and pretty much lost my account. I passed another account here today, so you guys are going to see me grind that to another 3K and get that payout hopefully in February. I'll talk to you guys tomorrow. Thank you for tuning in. If you learned something, share the show. If you didn't, you a hoe. I'm joking. Semi-joking. Have a good one. Learn something, share the show. Talk to you guys later. Bye.